Hey everybody, it's Wayne. Today I wanted to share with you a recent move in my portfolio. Verizon is a stock that I've owned since November of 2022, but I made a decision this month to go ahead and sell it off. We're going to go ahead and talk about the financials. I've got the question for you. Do you currently own Verizon in your portfolio? So let's go ahead and jump in. Now, normally, when YouTube content creators talk about selling off a position, it typically deals with them being upside down in their position. And I gotta say, right off of the bat, full disclosure, I was not upside down in my position. I was only slightly up. But one of the things that I was doing for the last several months is just becoming more knowledgeable in looking at the finances. When I first jumped into Verizon in 2022, I was all about that high dividend yield. For me, I thought I understood the business, right? Verizon, telecommunications, I knew the competitors were. But it wasn't until I began jumping into those financials that, to me, I was glad that I did have a rather solid price entry point. So I wanted to go ahead and cut my losses, even though they weren't losses, but my minimal profits, and I'm going to move on to another stock. So let's go ahead and talk about Verizon, stock ticker VZ. If we look at Seeking Alpha here, you can see it's been a bit of a train wreck when it comes to profit. Right now for the year, they're down nearly 27%. The last 5 years, which is often the first indicator that I now look at even before I pick up a stock, they are down minus 17%. If we look at the last 10 years, they have not been profitable and they are down 22%. Looking at the 52-week range, it goes from $32.79 to as high as $55.51. They do have a rather impressive dividend yield of 6.61%. And we're going to go ahead and take a look at those dividend matrix as well. Let's go ahead and jump into the financials. And this is something, again, I'm getting better about understanding. But if we go ahead and just hover over the gross profit, again, looking at everything, it's been kind of flat relatively for the last 5 years. And so for me, yes, I did own Verizon for a pretty solid entry point. I can only imagine if you are upside down, maybe you're going to hold off until you can turn a profit. But I don't really see Verizon turning a decent profit. And one of the things that I'm beginning to understand about this telecommunication space is that it is so competitive. You not only have the big carriers that are out there like Sprint, AT&T, but you have these smaller companies, right, that are piggybacking off of the towers that these other big companies provide as well. So for me, it's not like I'm jumping ship from Verizon to AT&T. I don't want anything to do with the cell phone space. So I was glad to get out when I did. We'll talk about how I was able to exit. Let's go ahead and take a look at the dividends. This is also something, for me, I want to earn that passive income. And Verizon, you look at, it's great, right? Starting yield of 6.61%. It kind of goes back to the current share price and where they're at for the year. But look at the payout ratio of 50%. Take a look here at the 5-year growth rate. This is something that doesn't really excite me. If you're a dividend investor, I would imagine you feel the same. So yeah, you've got a very solid dividend yield up front of 6% plus. But the growth rate, it's really nothing impressive. And so I think even if you got in at a solid price point, even today, I think you're going to be waiting quite some time before you see any reasonable profit as far as their financials. And certainly you're not going to see the growth that you might want to see as a long-term dividend growth investor. Currently, they're paying out 65 cents per share on a quarterly basis. And it's interesting because we'll talk about how I sold my position, and I kind of made a mistake when I sold a covered call, and I had those shares called away. So there we have a rundown on the financials, looking at the dividends. Let's go ahead and look at the charting here. Again, I love Seeking Alpha for this. We're going to go ahead and not just factor in price return, but total return, which would include reinvesting dividends. And again, if we compare it to the S&P for the last year, Verizon just did not do good at all. Minus 22% compared to minus 5% for the S&P. 3 years is going to look relatively similar. Minus 19% compared to the S&P doing nearly 56%. 5 years, a similar pattern. Verizon did show a profit. That's with dividends reinvested, 4.75%. but you compare that to the S&P, nearly 70%. And again, the last 10 years, Verizon does not even hold a candle to the S&P for a total. So I think there are better stocks out there for me to invest in. I am happy that I was able to close the book out on Verizon. Let's go ahead and break that down, by the way. I want to show you here where I was able to get in. This is my brokerage, which is Robinhood. It kind of lays out all of the transactions. And if you look at this, you will see that essentially when I decided to sell in March, I was doing nothing more than selling a series of covered calls. I look at it like, if I own 100 shares, why not have somebody pay me to buy the shares at a price that I'm comfortable doing? So let's go ahead and scroll down to November, and you will see where I purchased my 100 shares. And I think it's going to be, why am I not finding it? Of course, right here. So November 1st of 2022, you can see here that I bought 100 shares at $37.96. So in November, I spent $3,796. And again, I wanted to own those 100 shares to collect that solid dividend yield. And I also wanted to sell a series of covered calls. I learned rather quickly, though, there wasn't really much premium to earn. And so I stopped selling covered calls at the beginning of 2023. And my intention was actually to roll over my 100 shares to M1 and just really start banking those quarterly dividends. But again, as I began to look into the company, I wanted to part ways with Verizon. So let's see here what I did. If we go to my spreadsheet, you'll see I did not sell any calls until March of this year. And this is when I realized I wanted to sell out of my position. So what I did was, and again, we go back to my what I own the shares for. So let's go all the way back down here, because I already forgot. I think it was $37.96 per share. Yeah, so $37.96. So we'll just go ahead and say $38, right? I needed to sell above my cost basis in order to exit with profit. And so back on March, I sold a covered call for $40. Again, only making $4 when I opened up that contract. Again, I eventually bought to close for $1. So along the way, as I was looking for these shares to be called away, I only made what was a total of $20. But hey, that's $20 that I made rather than if I were just to sell out. So if you do have 100 shares and you're looking to exit a position and you can sell those shares for a profit, or even if you couldn't sell them for a profit, let's say you were okay with taking a loss. If you have the 100 shares, right? Of course, that's the big, the big contingency. You have to have 100 shares if you're going to sell calls. So that's what I've always done. If I'm going to sell out of a position, why not just have somebody pay me? And in this case, from March until, when I was assigned last week, I earned a total of $20. But that's not all, because if we do break this down and show the dividends that I earned on Verizon, this year I did earn a dividend payment of $65.25 for my 100 shares. So you take that $65.25, you go ahead and add in the $20, and then let's go back to the contract being assigned. So here you see it. I wrote a covered call with a strike price of $39.50. I'll go and highlight this line item. So on the 31st of March, again, I chose a strike price of $39.50. This would have been above my approximately $38 cost basis. I earned $10 for this, and it turns out that even before expiration, the person on the other end of the contract decided to exercise early. And this is the one mistake that I made. If we take a look back at Seeking Alpha and we scroll to the dividend, you will see here the last ex-dividend date was April 6th of 2023. So this person was smart because the contract had technically been in the money. They were able to exercise on me early, and in doing so, yes, they paid me, essentially $3,950, but they were able to also qualify for ex-dividend day. So they're going to be receiving that dividend payment of $65. I'm not too worried about that, but that is a mistake that I made. I should have pushed the contract out 2 weeks, because likely I would have been able to make a little bit more money, plus would have been able to score that last dividend payment. But there you have it. I'd love to hear from you. Do you own Verizon in your portfolio? If you do, did you buy when things were as high as $50? Have you been able to make an entry point at the $30 range? And a question that you might have for me is, Wayne, would you ever reconsider going back to Verizon? Currently, I don't think so. I mean, the dividend yield is really appealing. We'll go back here to the summary page. I mean, of course, who doesn't want to have a stock that they're paying out, 6.61%. One of the things that I was looking at during my research, besides just the never-ending competition, is the amount of debt that Verizon has on the books. And every company out there, has debt, and how they're able to manage it typically is not going to be an issue. But again, I go back to the 1 year, the 5 year, the 10 year. They're just not making money. It's a very competitive space. So I don't think that I'll jump back in, because I think as the price continues to go down and they're not making money, I'd like to think that the dividends will continue. And they do have a solid track record, so I don't want to throw shade at Verizon. They have been able to grow that dividend for 18 years. But we're talking about 2%, growth rate in the last 5 years. So I think there are way better stocks out there. Truth be told, right, the money that I made, right, so we've got the profit that I made on the call assignment. We've got the series of covered calls that I wrote, plus a dividend payment. My profit's right around $200+. I could take, that $200 profit plus the $3,950 that I was credited back to my brokerage. I could take that money and just invest it, or leave it in my brokerage in Robinhood and earn 4.4%. So I haven't decided on what stock I'm going to reinvest this money in for the time being. I'm looking at some other stocks, but I know that I'm not going to jump into another telecommunication stock like Verizon or AT&T or any other big brands that are out there. Hey, you guys were fantastic as always. One of the things that I'm trying to do is reach 500 subscribers, and the only way I'm going to be able to do that is with the support of all of you. So if you wouldn't mind, please subscribe. If you enjoyed the video, please go ahead and give it a like. And I think more importantly for the algorithm, I'd love to hear from you in the comments, specifically as to whether or not you own Verizon. So throw it down there in the comments. We'll see you on the next one. Thanks so much for tuning in.